What's good, YouTube? It's your boy Stanley, and I'm here to talk about currency pairs. On this currency pair session, you would learn a lot about currency pairs. I'll be talking about currency pair dissection. Okay, I'll be talking about currency pair dissection, how currency pair are disintegrated into different bodies. Okay, you will learn of things from this session, so I would like you to have your writing materials. Okay, so this is currency pair, and we'll be talking about currency pair, like in-depth currency pair, and we'll be also comparing it with equities and also commodities, right? So equities are something like the stocks, like Nasdaq, they are all integrated into stocks. So a Nasdaq is part of equity, all right? So some of the companies that are in Nasdaq, like Nasdaq 100, the first 100 companies in the United States, like Nvidia, Tesla, Meta Platforms, Google, right? So those are equities, and and commodities are like gold, silver, platinum, and all of that, right? So these are different asset classes that can be traded, that you can trade as a trader, all right? So but here we'll be talking about currency pairs. Remember what I said? I said that we are going to compare currency pairs with equities and also commodities. I'll be showing you on the chart what I mean about that. But right now, we will be talking about currency pairs and how currency pairs are made of. Who controls currency pair? Alright, so this is what we'll be talking about on this section, right? So, currency pairs 101. Get ready for that. Currency pairs can be traded in brokers. All right, so there are different type of brokers. So brokers are platforms that gives traders that provides traders with the platform to trade with, right? So they get commission. Brokers get commission from you using or from a customer using their platforms. All right, so there are different types of brokers. I've used a couple of different types of brokers, right? So brokers offer services to traders, and they collect their charges from commission, from spread. I will still talk about spread. So spread, we'll talk about spread when we are talking about the currency pairs. All right, so the spread will be on the currency pair. The spread is where brokers collect the money from giving you the platform to trade. All right, so these are currency pairs, these are equities, and these are commodities. All right, these are currency pair, equities, and commodities. So currency pairs are if you look at this place, you'll see that each currency pair has or a currency pair has two countries, like represented by just three distinct letters. All right, so this is USD Canadian dollars. This is USD Canadian dollars, right? This is GBP USD. So this is United States dollars, Canadian dollars. All right, so this is Great Britain pounds, then USD, United States dollars. This is the euro, the Europe, and the United States dollars. This is Australian dollars, and this is United States dollars. This is Great Britain pounds, and this is Japanese yen. So this is how the currency pair are. So there are two different countries in here, not just one country. These are two different distinct countries. This is USD, United States dollars, and Canadian dollars. This is Great Britain pounds and United States dollars. This is the euro and the United States dollars. This is the Australian dollar and the United States dollars. This is Great Britain pounds and the Japanese yen. So these are how, so each of these is how the currency pair are grouped, right? These are how the currency pairs are grouped, and the difference between the currencies, the difference between the currencies are called spread, right? The difference that you need for a Canadian dollar to buy USD is the spread, and that is where the brokers take their commission. You understand? So if you're looking for a broker to trade with, you should be looking for a broker that has a tight spread, all right? So that you wouldn't have you wouldn't be paying too much charge, all right, to trade. So that's one thing you have to look out for if you want to trade. If you want to trade forex, you should be paying attention to a platform or a broker that offers a tight spread, all right? So the first currency is called the base currency, and the second currency is called the quote currency, all right? So remember, these are two different countries. Now coming into equities. So remember, you can trade currency pairs, you can trade equities, and you can trade commodities. All right. So equities are contained on Nasdaq. This is Nasdaq. All right. So these companies, Apple, Nvidia, Meta platforms, Google, Tesla, and Amazon, they are all inside Nasdaq. So perhaps you've heard about SPY, S&P, or you've heard about Nasdaq, you know. So these are the companies that are inside Nasdaq, right? So I trade Nasdaq. You can trade Nasdaq. You can trade S&P 500. So these are equities that kind of calibrate the US tech industry. All right. So and now here is commodities. You can trade commodities. The instruments that are inside commodities are gold, silver, oil. You can see I represented oil with WTI and Brent. WTI is West Texas Intermediate. It is a part of US oil and gas stuff, and Brent, right? And natural gas. There are lots and lots of other even agricultural products are also part of commodities. Copper, all right? So, and it is always important to look at commodities because commodity exporting countries like Canada exports minerals. You understand? So the performance of some of these commodities reflect Canadian dollars. So that is what you have to pay attention to. All right. So these are the three different types of tradable asset that you can trade as a trader. All right. So let's go into the next one. Currency pair. Currency pair. It is a pair, which means it is two. These are two distinct countries, the United States and the Canadian dollars, the United States dollars and the Canadian dollars, the Great Britain pounds and the USD. So these are two different countries, their currencies. All right. Now, since it is two distinct countries, the first currency in the currency pair is called the base currency. The second currency in this currency pair is called the quote currency. All right. So the base currency and the quote currency, that is what you have here. These currencies, the first one is the base currency, the second one is the quote currency. Here, the first currency is the base currency, the second the quote currency, just like it is. So the first one is the base, the second one is the quote currency. If you're clicking a buy based on your analysis, you're not just clicking a buy on USD, Canadian dollars, or Great Britain pounds, USD, without just knowing what's happening. It means that you're selling or you're buying a currency pair. Now, on the most important part of the currency pair is the base currency. This base currency is the currency you're buying or you're selling. You as the trader, the first currency pair is the most important currency pair, the base currency. So that is what you're buying and that is what you're selling. Okay? Then the quote currency. The quote currency is the currency you use to buy this currency. Let's say, for example, we believe that, remember I said that the base currency is the most important currency. That is the most important currency. That is what you're buying and that is what you're selling. Now, let's say, for example, that the USD, based on interest rates, economic data, that we believe that the United States dollars will strengthen against the Canadian dollars. Now, this is what we are going to do. We are using this Canadian dollars. Let's say it's going to cost us about 1.35049 Canadian dollars to buy USD, to buy 1 unit of USD. We need about 1.35049 Canadian dollars to buy USD. All right, so this is the currency you're buying with. Okay, these are the two disintegrated pairs. These are disintegrated pairs too, so they are divided into two. Now, if you're making this transaction, if you're clicking a buy on your platform, you're clicking a buy or you're clicking a sell on your platform, remember you're making a transaction. You're buying and you're selling, which means that you're not just buying into the thin air, or you're not just buying into the thin air, you're buying and you're getting from someone that is selling. And if you're going short, you're buying from someone. If you're going long, you're also selling. Someone that is selling is giving to you, is selling to you too. But your platform, your trading platform gives you that opportunity to do that, because you can't go to the Wall Street and be like, you want to buy a currency, or you can't go to the bank. You can actually go to the bank, but it's a platform. So that is what a platform gives you. So if you're making this transaction, if you're clicking this buy and this sell, you're making a transaction, which means there is a transaction that is going on. And you have to pay your broker for this transaction. This transaction that you're doing by clicking buy or you're clicking sell based on your analysis is called a spread. That is the commission fee. That is the transaction fee. That is the transaction fee you're paying to make this transaction. So it is called a spread. If you go to MetaTrader 4 or MetaTrader 5 and you create an account and all of that, if you go to perhaps on a USD card, you will see a middle number, like you will see bid ask. All right, so you're paying a spread. That number on the middle is the transaction fee that you're paying, which means that sometimes if you click a buy or you click a sell and the market goes towards your direction, you wouldn't start making profit already. The market will go a little bit. You will still be on the minus. You will still be on the minus before you start getting your profit. So that is how it works. So here, you're paying the commission to make this trade. So the broker gets the commission first before you start making the trade. So that's why when you click a buy or you click a sell, the market, your broker will still keep you on the minus before you start making profit. All right. So remember what I said. This is the USD and the Canadian dollars. I will give another example with another currency like the Japanese yen or the GBP, the Japanese yen. All right. Let's get this. Let's clean this. So let's say GBP, JPY. So this is Great Britain pounds and Japanese yen. All right, let's say for example you need about 101 Japanese yen to buy one unit of Britain pound. All right, and the transaction fee that you're paying to make this transaction here is the spread, which means that you have to, if you're trying to choose a broker that you want to trade with, you should make sure you're choosing a broker that have a very tight spread, so that you wouldn't get because sometimes brokers, they do some sort of things that aren't good. All right, so you have to make sure that the broker that you're using gives a tight spread. There is tight spread on most of the major currencies. So in currency pair, there are major and minor currency pairs. All right, so remember what I said on USD, Canadian dollars, and on GBP, JPY. All right, these are two currencies. The first currency is called the quote currency. The second currency is called the first currency is called the base currency. The second currency is called the quote currency. And this is the currency you're using to buy this currency. All right, which means that if you're clicking a buy, you're using this currency to buy this, but it's just on your platform. You're not doing it physically, but you're just clicking a buy or a sell based on your analysis. All right, yeah, I hope you understand what I'm saying. All right, let's go to the next chapter. Equities and commodities. Equities are Nasdaq 100, S&P 500, Russell, and gold are commodities. Silver, lots of them, copper, natural gas. All right, so these are commodities. These are commodities and these are equities. The charts on their charts are very clearer than currency pairs. You know, because of economic interest rates and GDP and all of those, central bank, talking and all of that, it doesn't make the currency pair flow. If you check on a monthly chart, I will show you that on chart. If you check on a monthly chart or a weekly chart of USD card, monthly chart of USD card kind of looks something like this. But if you look at a pair like silver or gold on a longer time frame, or you look at Nasdaq or S&P 500, the charts are more cleaner than the currency pairs. All right, guys. So this is a monthly chart. This is a monthly chart on USD Canadian dollars. Okay, you can see how the chart looks like, kind of a zigzag type of movement. All right, so this is 1 month, this one and this is 1 month, and this is 1 day. This is 1 day. You can see how dirty. Let's just remove this. You can see how dirty this USD card looks like, up down type of so it's kind of too dirty, but it's unlike commodity or equities. You can see how dirty this candlestick, this chart looks on USD card. This actually happens because of this is currency and lots of interest rates, the Fed making GDP data, releasing data and all of that, monetary policies and all of that. So this is why the currency pair is always kind of something like this. Let's go to a
let's go to equity. Let's go to Nasdaq. I'm going to start on 1 month on Nasdaq. You can see how plain and neat it is on equity. You can see how it has a defined trend. You can see that it's just bullish. Just look at how neat, how straight it is. This is a drop of 2018. This is a drop of 2020 Russia invasion. You understand? So on all these, all the drops are shocks that happened on economic shocks. You understand? This is 2008. This is the financial crisis of 2008 that made this equity drop here. And since then, it's been bullish. Okay? It's been bullish until 2018. We had another market crash. On 2020, February 2020, we had Russia invasion. This is why the market dropped here, and here on 2022. All right. So still shocks that are affecting the market, but on a long term, it's been bullish. Do you understand? And on a 1 day time frame, you can see how it is. It is still defined. It is still defined. It is neat. Can you see how it is? But it is unlike a currency pair. It is unlike a currency pair. Let's go to commodity. Let's go to silver. Or we can take okay, let's check gold. Let's check gold on 1 month, on a monthly time frame. You can see how defined gold has been. Straight up, this is the drop of the 2008 economic crisis, economic meltdown, global meltdown economy. Do you understand? And remember that gold is a safe haven. Gold is a safe haven asset. So each time there are war or shocks on the market, like natural disasters or stuff that affect the market, people run to gold for safety. All right. So that is why gold is called a safe haven. USD, United States dollars, is also a safe haven currency. All right. Japanese yen is also a safe haven currency because of the low interest rates the central banks offer. Okay. So you can see how straight this trend is. Unlike let's go on a daily time frame here. Just look at how neat it is. Look at how neat gold is on a daily time frame. Okay. But a if you go on a daily time frame on a currency pair, you can see just how dated it is. So this is what I'm talking about on currency pair. So you can choose to trade the neater ones, or you can choose to trade USD card, which is not quite neat like that. All right.
So you can choose to also trade the Nasdaq 100, S&P 500, or you can choose to trade gold, silver, natural gas. It depends on what your platform offers you. All right. So you can choose to be a day trader, or you can choose to be a swing trader. If you're a day trader, that means you're buying either this gold or Nasdaq, and you're selling it that day. And if you're a swing trader, it means that you're buying this gold or you're buying this silver and you're leaving it for about 2 days, 3 days, 1 week, which means you're swinging that position. You're swinging the position you have on gold, or you're swinging the position you have on silver. So you can either be a day trader, you can be a swing trader, you can be an intraday trader. There are traders that trade on a 1 month time frame. All right. So 1 hour time frame and higher time frame are the most strongest time frames. The lower time frame, like the 30 minutes, 15 minutes down to seconds are the shortest time frame. So you can choose to trade either of these instruments on any time frame you want, but the higher time frames are more stronger on support and resistances. Okay, so we've come to the end of this lecture. I hope you learned something from this lecture. Remember, I said on a summary, currency pairs are two countries. All right, the USD and the Canadian dollars. If you need about 1.34059 Canadian dollars to buy USD, or if you believe that the USD will strengthen against the Canadian dollars, you buy. If you believe that the USD will weaken against the Canadian dollars, you sell based off of your analysis by either support or resistance or on supply and demand or any strategy that you trade. So that is the summary of the USD card. And on NASDAQ, S&P 500, the gold, remember, these are equities. These are equities and these are commodities. These are commodities. You can choose to trade any of these and the currency pair. So these are a broad market or a broad basket of tradable instruments. Okay, I hope you've learned something from this lecture. I can try and bring a couple of other lectures to you guys. Please like and subscribe and let's get this channel going. Okay, I hope you learned something today and see you on my next class. I hope you enjoyed something today and I hope you learned something today. All right, bye.